Hello, welcome to the European Open briefing for Wednesday, June the 14th. I'm Rafi Boyajian, currency analyst at xm.com, and we're going to be looking at the latest developments in the currency markets today. So the focus today is, of course, on the Federal Reserve. They will conclude their two-day monetary policy meeting later today, where markets are widely expecting the Fed to raise rates by another quarter of a basis points to a range of between 1 and 1.25%. We will also have a press conference by Fed Chair Janet Yellen, so given that the rate hike is now mostly been priced in by the markets, what investors will be looking at is what the FOMC members will be signaling about future rate hikes. The dollar, though, is mostly flat ahead of that decision, but other big movers this morning, we had the Canadian dollar. It's extending its gains again today, nearing a 4-month high. We had more hawkish remarks by the Bank of Canada yesterday by its governor. It follows follows the senior deputy governor who spoke on Monday, who first triggered that shift in tone by the Bank of Canada to a more hawkish one. In terms of data, we had quite a bit of data out of China this morning, which was fairly solid, and it did help a little bit the Australian dollar as well. The Kiwi is also doing well. Both currencies actually had come under a bit of a slight downward pressure earlier due to slightly weak data, but both currencies are now heading back up again. Oil, on the other hand, has slipped this morning following higher inventories in the US and the OPEC's monthly report, which actually showed that OPEC output increased in May. But let's begin with the US dollar. We can see the dollar index here in purple. It's down to around 96.87 at the moment. That is in part due to the stronger Canadian dollar. If you look at dollar-yen pair, it's a bit steadier. It's currently just about holding above the 110 level. So the Fed funds future is currently pointing to 100% probability that the Fed will be raising rates later today. The FOMC statement will be coming out at 18 hours GMT, and given that that's now pretty much expected, it's going to be interesting to see what the Fed will be saying about future rate hikes. Given that data in the US has been on the soft side, although growth does appear to be bouncing back in the second quarter, it's not as strong as one would have expected, and also inflation indicators have also been on the soft side as well. There are concerns that core inflation is heading back down again, so that could trigger some FOMC members to sound a little bit less hawkish, maybe slightly dovish, and that would have a negative impact. On the other hand, if the Fed comes out sounding very confident about that inflation will continue to rise towards the 2% goal, that would be obviously positive for the dollar. And also to look out for is what the Fed will be saying about reducing its balance sheet. They could potentially signal that they will start that process in September. If not, it will probably come in December. Let's have a look at the Canadian dollar now, because we can see those sharp gains for the loonie in the past 3-4 sessions. It's currently at a fresh 3.5 months high, 1.3210. We had the Deputy Governor speaking Monday, and this was followed by Stephen Poloz, who's the Bank of Canada's governor, who said that the interest rate cuts made in 2015 have largely done their work. That signals that we will not be seeing any further cuts, and potentially the next one will be up. So rate hiking expectations by the year end by the Bank of Canada have now gone up to 72.3%. Although the next meeting at July the 12th, that's a bit too early. It's quite likely the Bank of Canada will wait a bit longer for growth to strengthen a bit more before starting to raise rates. And also worth mentioning that Poloz did sound a little bit concerned still about sluggish exports out of Canada. And moving on to China now, because we had quite a number of data out. We had industrial output that rose by 6.5% year on year in May. That was unchanged from April. Retail sales were also unchanged at 10.7%, slightly above forecasts of 10.6%. So that signals that in May we still had solid growth in China, although there were some signs that investment may be cooling off. Investment in urban areas slowed to 8.6% in the year to date in May. Expectations were for 8.8%. And investment fell across the board in the property sector, infrastructure spending by the government, construction investment as well. So that could potentially be a sign that a slow growth to come. But for now, it looks like China is maintaining its steady growth path. But there's also some interest as to how the People's Bank of China will react later today to a rate hike by the Fed in March. We saw the People's Bank of China raising short-term interest rates, but for now the yuan appears to be fairly steady in onshore trading, so that I guess the markets aren't too concerned about that. Moving on to commodity currencies, the Aussie and the Kiwi. We did have the Westpac Consumer Confidence Index out of Australia, which showed the consumer confidence falling for a third straight month in Australia. We saw a very modest drop in the Aussie when the data came up. It's since resumed its uptrend. It's still trying to top last week's 6-week high of 0.7566. It tried that again yesterday. It failed, so it may have better luck this morning. The Kiwi is doing even better, although the Kiwi did fall more sharply earlier today. We had a bigger than expected current account deficit in New Zealand. That was mainly due to weak exports of dairy products, although dairy product exports are expected to rebound, and most economists expect a very strong outlook for the New Zealand economy, so that's why we're seeing the Kiwi making fresh highs. It hit another 3.5 months high of 0.7239. So for the time being, both currencies are actually looking rather bullish. Quick look at oil prices before we go, because we did have quite significant developments, although the reaction in the markets wasn't as strong as you might have expected. US oil inventories rose again last week to 2.75 million. Expectations were for a 2.5 million drop. We've got the official numbers out of the US government later today, but more significantly, we had the OPEC monthly report, which said that actually the OPEC output rose in May. That confounds what OPEC is attempting to do at the moment by their agreement to freeze output. Also, the monthly report said that OPEC now expecting the oil market to rebalance at a slower pace. So all of that potentially creates a much more negative outlook for the market. But although prices are down by 1%, oil prices are pretty much within their recent range. US crude is trading just below $46 a barrel. Moving on to today's economic calendar, we did have German final inflation numbers for May. We're going to have UK unemployment data coming up shortly, Eurozone industrial production numbers, but it's going to be a very busy US session. We've got both inflation and retail sales data, both of which are very important for the Fed, and that Fed decision will be coming at 18 hours GMT, followed by the press conference by Janet Yellen at 18:30 GMT. That's it from me. Thank you very much for watching and have a great day.